We will start today's conversation with Sonali Vijayavargiya, founder and managing partner of Augment Ventures. Sonali, welcome to the show.
Thank you. Thank you for having me.
So let's get acquainted. Let's get you introduced to our audience. Tell us a bit about your background as well as what you're doing with Augment Ventures. What is the positioning and what is your investment thesis?
Sure, for sure. So a quick introduction to myself and to the firm. So I grew up in India and went to school there and worked with large institutions in India and started an investment banking company there with a bunch of my friends and took India-based technology companies to NASDAQ and Bombay Stock Exchange. So did that for a while, and that was a lot of fun. And moved to the U.S. in 2001 and worked with a number of local entrepreneurs in the Ann Arbor area, Midwest area particularly. A tremendous amount of technology and research was going on in, these universities, like University of Michigan, State University, state universities, what's happening in Chicago and other areas. So I ended up spending some time mentoring and working with entrepreneurs to take their companies for financing or finding customers. And in 2011, started Augment Ventures. So the thesis of the fund is really investing in enterprise software, smart hardware, technology companies, really early stage. We are generally the first professional money that is in the company. So, we are working with young teams where the teams are still getting formed and there is some customer engagement going on with the company. And what we are trying to do is really see how these solutions can have a massive impact on efficiency and sustainability and health and wellness, how we can use technology to not only impact just the North American envelope, but actually take the service all across the world, right? So people can experience the solutions or these products in the same way that people who are building these products are from the land here.
How big is the fund?
The fund is we have about $20 million under management, and we typically make investments ranging from $250 to $500K to start off, and then stick with the company as long as they are in various rounds of funding.
Okay.
The way we work is that we have a dedicated fund, and then we have a pledge portion of the fund where we are able to participate and continue to fund our company as they grow forward.
Okay. And what is the geographical focus of the fund?
So we are at this point investing all over North America, but focus areas for us are the Midwest, Michigan and Greater Midwest area, as well as Bay Area. We have a number of our portfolio companies that are in that region as well. We have a little bit interest and engagement in the New York and Boston area, but primarily I would say it is Midwest and Bay Area.
Are you based in Michigan? Is that right?
Yes. Yeah.
Okay.
We are based in Ann Arbor, Michigan. Yes.
Got it. And when you say you're focused on enterprise technologies, does that mean your primary business model is a software as a service business model?
Not a really service business model. As you see, most of the solutions that in today's world or products that we are using, they are trying to eke out all kinds of productivity tools and solutions for an enterprise. So one of our companies that we invested in, which is a Michigan Ann Arbor-based company, is a company called LlamaSoft. And it is in supply chain. It's a supply chain product which helps you optimize and network and visualize your supply chain more optimally. So they have a SaaS product which are deployed all over the world. Fortune 500 companies are using that product. So when we talk about enterprise software companies, we are really talking about different kinds of products, whether it be in security, whether it be in supply chain.
I'm asking is business model-wise, enterprise software today, for the large percentage of the companies out there, are selling their software and software as a service as a subscription software business model.
Yeah.
So that's your business model.
Exactly. So exactly. Most of our companies have that business model. They have a subscription business model. And then, I think when a lot of times, particularly how I see, people are investing, of course, they value the recurring model, which is rightfully done. But oftentimes, there's a lot of ding if there is even any part of the managed service part. But somehow I feel that, products don't walk by themselves, and you have to get engagement. So some of the investors, they are extremely pure play, they just, of course there's some percentages and things like that. If your 90% of your revenue is coming from managed services, then it's a different case. But some element of managed service is a good in a company, because that shows that you understand how you will support your clients and have a long-term value in the product that you're selling. So, some investors that I have engaged with or tried to collaborate on deals, and they say, if there's managed part of the service, then we are just not interested, because that's a 1X for us.
I think her line went thin. Right?
Can you hear me? I can hear you.
Yes, now we can hear you. Go ahead.
Sorry.
So let me use that understanding of your investment thesis to ask the question: to write a $250K or a $500K check, what do you want to see by way of proof point in the company? Do you want to see a certain MRR level, or what? How do you decide what threshold you want to engage in?
Yeah, so I think oftentimes one of the questions is that VC engagement or professional engagement is getting to a later and later stage. That is very, very true and obvious. So as I mentioned earlier on, in most of the cases, we are not taking discovery risk. We are taking execution and growth risk, expansion risk. That's what we are doing. So when we engage with a particular company or any kind of an opportunity, like most investors, we are really looking for that massive market, because, as you know, cost of capital for VCs are very high, and we have to give returns to our investors. So what we are looking for is that massive market, team cohesion, and we are looking for customer engagement. So at that level, we don't have a very strict bar that, hey, they need to have 1 million in ARR or something of that sort. But what we are really looking for is that how is this technology or this product or this service or whatever that might be that we are investigating as an investment, how can it make that impact and really create that value? So I think for us, really the market opportunity and the team cohesion plays a fair amount of weightage. I would almost put it as 70% of the weightage, and the third component of that would be customer engagement. And we spend a lot of time, even if they haven't signed on to a customer as a paying customer, and they're engaged with them, whether in a pilot form or trying to engage them as a pilot. We spend a fair amount of time talking to customers and discovering customers for whatever things that's exciting us or that we like, So that's how we make an investment.
Okay. And talk about a few of your investments, and particularly walk us through your thinking about when you met them, how did you meet them, what was it that they had that made you think that, yes, we would like to write the check?
Right. So I can, one of our very successful companies, as I mentioned to you, is the supply chain company, Lamasoft, which was in Ann Arbor. So, that was part of our ecosystem. That company was there. They had on-premise product, and they were pivoting to a SaaS model, and they have been, duct taping their way around, and they decided to make the pivot and really grow the company. We would like to raise a professional round. So I knew them from the community that I am in. So while doing diligence, we engaged with Nike and some other groups to make the investment. So Augment orchestrated that investment with Nike Ventures, and we got a partial exit of that deal for $360 million, and we're able to give great returns and great outcomes to investors and founders. So the thesis of that investment in particular was how this solution is going to impact profitability, visibility, as well as sustainability in the supply chain area, right? I mean, it's a massive, massive market, and now the company is tracking almost $100 million in revenue run rate. So the engagement was from the local community.
Just a second. Was Nike the key customer? Is that why you went and with Nike Ventures? Yes, okay,
yes. Yeah. So we were actually doing diligence, so the company came to us and said that, hey, Nike is our customer. And we said, oh, really? Let's go and chat with them. So we were actually talking on the product side, like, hey, how are you using the solution? What's your plans for growing and making sure the solution is spread all across Nike? And, they realized the potential of that. And actually, Nike's entire supply chain excellence is based on the backbone of LlamaSoft software. So, it's just like our inquiry into the customer actually led them to be an investor in the company, which is kind of interesting. So it was good for the company. It was good for us. We got a lot of validation for a young company, that is trying to get this product out. So that was exciting for us. So that's the company that came out of our local ecosystem where we knew the people. Another example that I would share with you is a company called Flume. It's in the water space, and this came out of Cal Poly. And this was brought to us by one of our champions and our co-investors from the Bay Area. And they say, hey, really hustler group of students and founders, and you should chat with them. So it's a very elegant solution for leak detection and water management. Now, I'm sure a lot of people have spent time trying to understand water and how it impacts and how we are not truly valuing, the cost of water. So I was always excited, and I've tried to play in that space for a long time, but haven't found the right solution to get behind. And this is a great product which not only met direct consumer needs, but also met the needs of, around more than 50,000 water utilities that are there. So there's a simple device that straps onto the water meter, and then the data is monetized both on the consumer side as well as on the water utility side. So again, the draw to that particular deal was it's a $1 billion opportunity, not only in North America, but can be easily transported all over the world. The team was really passionate, was really driven, and understood also it was a young team, but they understood how to develop, experience and talent within their startup. So, that gives us a lot of confidence on that young team to be part of them. And the third thing was, we just thought that it has multiple layers of monetization, whether it be for utility, whether it be for insurance, and whether it be for home detection. So it was a massive market. So that got us really excited to participate in that deal as well.
Okay, very good. And you mentioned something about getting a partial exit. So a lot of small funds are doing that. They're kind of exiting into later rounds. Is that something you're doing on a regular basis? Is that part of your investment thesis for the fund?
Yes. I mean, I think, there comes a time where you think that, we got like 15 times return on our investment in LlamaSoft. And, it was, we felt like strategically it was, and also depending on the life of, funds have their cycle, their life, and keeping all of those things in mind, we thought that as LlamaSoft continues to grow, we would definitely like to take benefit of the upside, but maybe it is a good time to take some capital off and give it to our investors. So that equation, changes based on the life cycle of the fund. So it's not a set, time or a formula, but it depends upon at what stage the exit appears and at what stage the fund is in.
Talk about the Michigan ecosystem a little bit. What's happening? What are you seeing? What's been the trajectory in the last decade? And, what are the key drivers, key trends, etc.?
Yeah, I think, when I actually, it's been a really interesting transformation, I would say, of the ecosystem. So I moved from Mumbai, India in 2001 to Ann Arbor, Michigan, which was interesting given, the bustling city of Mumbai, and I was just looking for where are the people here. So it was an interesting time for me. And I really enjoyed working with startups, back in India, and I wanted to engage in the ecosystem. So I went around looking. I said, well, there are, it's obvious, like there are these massive universities. Where is the tech transfer? There has to be something happening. And, I had to go some far off campus place to find the tech transfer. Fast forward now, tech transfer at University of Michigan and MSU and Wayne State, they have done such a tremendous job of, commercializing technology that is coming. There's more than 10 billion going into research in this geography, right? And so the awareness that, hey, we can drive value and actually impact outcomes by commercializing the technology is immense. So, on the mobility side, on the healthcare side, on software side, I think all facets have been greatly impacted in this process. We had Duo Security, another Ann Arbor startup, which was acquired by Cisco for over $2 billion. So there have been a couple of unicorns as well in the area. And the other part is that, these entrepreneurs have stayed in the region and have reinvested into new startups. So I think the engine has really started and people are engaging in with that. Also, the other part of it is that there is an increasing awareness of teams and solutions that are coming out of different regions other than just the Bay Area or New York, Boston area, or, Austin hub or whatever other hubs are there. And people are willing to get on a plane and meet this, not now, but, meet with these teams. And another thing that has happened is there is a ecosystem of local investors have emerged, which gives confidence to partner with, so for Nike, having Augment here in Ann Arbor facilitated that investment. I mean, I think Nike by themselves would have thought in Ann Arbor, Goldman Sachs, who later on became an investor in LlamaSoft as well. So there is an engagement from in larger investors with local partnerships. So I think that's how the model here is evolving. And additionally, there's lots of quasi, development programs that the state government or the universities or local counties and angel groups that have formed here, they are facilitating, that, seed to A kind of time period where people are understanding how this entrepreneurship and startup world and how these companies work. So there is a lot of education as well that has gone into informing these communities. So, I feel that now it would be fair to say that there's a sort of a hub forming.
And is most of the activity in Michigan out of Ann Arbor?
Ann Arbor is one of the strong bases here, but there is Lansing area. There are startups that is because that's closer to MSU. That's where a number of startups are there. There is also Grand Rapids area where there's a number of angel groups and startup activities and accelerators there. Of course, there is Detroit for sure, where there is a ton of activity to draw talent into the city and have startups and fundings and things like that. There is Traverse City as well. So there are a number of areas in Michigan where these activities are happening. So the way Augment works is, of course, we are part of this ecosystem, but when we reach out to entrepreneurs outside our local geography, oftentimes they are looking for relationships or connections to this area. So among the various portfolio companies that we have in Bay Area, almost all of them are engaged with large corporations or talent or development house or whatever in this greater Midwest geography. So the way we see is that we have a symbiotic relationship. So we are really going after a solution or a product or a company, whatever that might be, that resonates with us, and we think that it's going to make an impact. And then we try to collaborate and work with our syndicate partners that we've been working for last 10 odd years, whether it be TPG or Goldman Sachs or Capricorn or DCM or whoever that might be. So we have over the time built relationships both with corporate venture funds as well as large private venture funds as well. So that is what we bring to our group of portfolio companies, as well as these customer introductions where they are trying to make. I think that's the biggest thing a venture fund can do, or any investment that you make in a portfolio, is expand their access to customers.
So does that mean that your portfolio weighs heavily in the manufacturing sector, the automotive sector?
No, not really. We do have an investment in an automotive sector. It's a smart hardware device that straps onto your. It's in tire pressure monitoring. It's out of Bay Area. Actually, it's kind of funny. The only automotive company that we have invested in is out of Bay Area, which is interesting. But they did benefit from our relationships here, to make introduction to customers. So I think, like I said, it would be easy to say that we are sector agnostic. We are really looking for the right opportunity. There's another one that we are exploring at this point, which is in ag tech, where the play is how do we, increase output and yield by 50% and reduce the environmental impact by 50%. That's the USDA guideline for ag tech. And how does one do that? What kind of a data, what kind of information is going to make you achieve that? And what's the technology behind that, right? How would you engage with them? You're talking about carbon sequestration in farmland. How does that happen? So I think, our vision of our fund is pretty impactful. We are really trying to see that engage with groups and technologies that will have a massive impact. I think that gets us excited, and we leave no stone unturned to make a portfolio company successful.
Very good. That gives us a good sense of what you're doing, and maybe we'll start doing some stuff together.
Yeah, for sure.
Sonali.
Take care. Bye now.
Bye-bye.